Welcome back for another top-notch video. This week, guys, we'll be talking about the week of February 10th through February 14th, second month of the year. We are ahead of all TSP funds. We are beating the market currently on this channel, doing very well, very, very good. I'll go over some of those percentages so you can see them. But first, our channel is all about the CSI and F fund for the TSP and for Roth IRA, brokerage accounts, retirement accounts. We are all about IVV, VXF, EFA, and AGG for ETFs. If you're interested in investing in those for these funds, you can be in the C fund or IVV ETF, and that's equal to the S&P 500. The S fund or the VXF, that's equal to small caps. The I fund for TSP or EFA ETF for international markets, or the F fund for TSP or AGG for retirement accounts for bonds. Again, like I said, if you have retirement account, brokerage accounts, anything to do with the markets, this channel is definitely for you. Please like, subscribe, or share. Let's move right into it and very quickly. So the first thing I want to bring up is the top-notch channel, how we're doing for the year. This is our spreadsheet of kind of how we are doing. As you can see, we are contributing to our funds, and for our percentages and gains and loss for the month, we gained about $1,200 this month, doing very well, or about 1.89%. That puts our total gain for the entire year at right around 5.83%. So we're doing very, very well for this year. Usually markets make around 8 to 10% average a year, so to have about half of that already in the second month of the year is doing very, very well for top notch. And I'll show you just how well we're doing compared to some of our peers out there in the markets. So this this website here is from the TSP Talk. They kind of combined all the accounts on here, kind of show where people are sitting at. So as you can see, rank wise, top notch is sitting at right around number 6. So we're doing very well there, sitting at a little bit lower than I showed you, but still we had made about 1.89% for the month. Doing very well. Number 6 on the list, not bad at all. Hopefully we can increase, and as you can see, we are beating that C fund out, which is sitting at 4.86%, which is the highest fund. And I'll go into our percentages now. So as you can see, for our percentages for the year, month, week, and day, our CS and I funds, or IVV, VXF, and EFA, and AGG, those funds for the year, as you can see, sitting respectively for the year 1.88% for the F fund, C fund 4.86, 4.42, and negative for the year. So we are sitting at 5.83. Again, sitting ranked at right around 6 on this site, the TSP Talk website. Doing very well, beating all these market funds, beating the market. Excellent, excellent, excellent. We're doing very well. We're very happy for where we're sitting at. And we kind of like to do just kind of a general review of some of our funds and whatnot, and then we'll kind of do some analysis, and then finally move into our final video. That being said, again, sitting at that 6% here, and we have over 1,000 accounts on this website. So number 6 is pretty good for where we're sitting at. Again, please like, subscribe, or share if you'd like to see more videos. So as I mentioned, these funds are sitting at there for the week. We had a pretty big week for the S fund. We were about 50% in that fund, so we were sitting at 2.46% for that and 1.65% here. So we gained right around 2%, or like I said, 1.89% for the week. For the month, guys, this is pretty incredible. We're seeing the CNS fund right around 5% and the C fund right around 4%. That is a massive gain from 1 month. We're hoping to see some consolidation possibly in regards to that, but we'll have to wait and see. We want to be cautious moving forward. And if you'd like to see these charts on a weekly scale by chart, here it is for the CSI and F fund, or AGG, IVV, VXF, and AG and EFA. So as you can see, the S fund or VXF was doing very well, whereas the C fund, IVV, a little less, and then those other funds were right around even for the month, the week. Finally, let's go into some commentary about some of these things. So let's take a look at our TSP Talk. A guy named Tom does some of these commentary. As you can see here, our rising trend line here for markets. Charts are pretty extended on that IVV or the C fund. They're way up towards the top there. We might see this start to consolidate a little bit. We saw a little consolidation right here before February, but it rocketed right back up, so we'll have to wait and see where that goes. Our PMO line is above our moving average, so that is positive, and our volume is pretty high, pretty decent for right now. The S fund is also towards the top of its trend line here, and we see an open gap which they put in here. Usually open gaps tend to be filled, so we'll have to wait and see if that moves back down to be filled, and we'll have to see going forward. The I fund is kind of really struggling lately. A lot of open gaps in here, kind of a lot of things going on. I just think not one of the better funds to be in. We'll show that through technical analysis. And then finally we have AGG, or the F fund, and that fund has stayed in its trend line for some time. It looks to be bouncing off the bottom of this trend line to move higher, so we'll have to wait and see where that goes from there. Another website we like to look at is Grow My TSP. One thing they like to mention on here is we need to be cautious if we see the C and S fund break their 10-day moving averages. The 10-day moving average they put on here, and as you can see, we are above that. I don't think it can stay extended past that for very long, and that's where we might start to transfer some of our funds out when we see that, because eventually it's going to have to come down and hit that 50-day moving average. We haven't hit that in almost 1, 2, 3, 4, 5 months now. It's almost 6 months time period where we have not hit down our 50-day moving average. So we'll have to wait to see where that goes. As far as RSI goes, as you can see, we're not above the level here, but not below it. The last time we saw something similar like that with some space in there, we saw this back in October. So as you can see here, seeing some space moving up for the charts. Finally, for the S fund, another thing they mentioned was that 10-day moving average. We are above that. As far as MACD, we did have a cross here with MACD in February, and we are moving higher, and our RSI is not in the green just yet, sitting just below it. Same time period was right around here in October, and we saw massive growth. So we'll have to wait and see if that can cap out or not. I think we still got a little room to run. iFund not, as you can see, kind of turning over here on our averages, about to cross that mid-trend line there, and we're sitting right around our 50-day moving average, waiting to see if it pops through that or not. If it does, our next line of support would be that 200-day moving average, and we really don't want to be messing around with that right at this time. Now we'll jump into a more technical analysis with all of our funds moving forward. One of the first funds we like to look at is IYY. This is a general market fund. It has all of, basically, IYY is an ETF. It looks at all market participants, the entire market, to kind of see where things are going. So we like to look at this starting off. As you can see with this, we are above all our trend lines. We're starting to exceed that trend line, the top trend line there. The last time we did that was towards the beginning of, or the end of January, and we saw that fall in prices. So I could definitely see us coming back again, probably hitting this 20-day moving average. They don't have the 10-day moving average, but we're above that average as well. Look at these averages, guys. They are going straight up, though, with our smallest moving average on top and then our slowest moving average on the bottom. But they are all sloped upwards. Look at this bottom trend line, how low this is. Could be quite a dramatic fall if we saw that, but I think we'll definitely bounce off some of these trend lines moving forward first. This is definitely a roaring market. Has been since October, and it's just gone up and up and up. But as we all know, markets tend to go up and then they tend to consolidate. So we see upward movement and then we see consolidation. So we'll have to wait and see on that moving forward. From a technical analysis, IYY, one of the things we're seeing on a long-term basis, this energy has really come down a lot, but we have not seen price do that as well. This is our derivative oscillator. It's moving down towards the negative. Typically when it moves down to the negative, we see price react. We only saw one negative week in there, which is really impressive. Usually we see that come down. One indicator saying that we might see a fake out here is our PPO, or our price percentage oscillator, has not crossed our moving average. When that happens, we can tend to see possibly fake outs, and when we see fake outs, usually they last anywhere from 1 to 3 bars, so 1 to 3 weeks. So we'll have to wait and see on that. We're going to stay kind of locked into our equity funds, I think, until we get a more clear picture from IYY. On a midterm basis for IYY, you can see that the 2-day chart just came out of a negative thing and is now back positive on the, almost positive, the derivative oscillator. Probably this week it'll turn positive. And our PPO, or our price percentage oscillator, has moved above our moving average. Price has reacted to that and is moving up and moving forward. So very, very good there. Saw a little consolidation here. Not as much as we'd like to see, and then continued upward. On a 4-hour chart, you can see that we have been basically market participants have been kind of not knowing what to do. As you can see here, a lot of the derivative oscillator has been very similar throughout, all in that 3% category across the board for the last couple of days. We're starting to see it start to move down a little bit here as our price percentage oscillator moves forward. If this tends to touch, I think we're going to try to get out of some of our equity funds, not by much, and I'll show you why later on. But that's what we're looking at on a 4-hour or short-term basis for IYY. Moving forward to IVV, C Fund, S&P 500. With the S&P 500, again, we're above all our moving averages. Trend lines way up there. Again, we touched this trend line here, and we saw some price movement downward, and then we saw some bouncing back and forth. We are way up there. So we are considering doing a possible, maybe just taking out a little bit of funds to see where this might dip to moving forward. On a long-term basis for IYY or the C Fund, you can see that charts are sitting about the same here. We saw negative energy for that oscillator, the derivative oscillator. Even saw 1 week in the negative here, but our price percentage oscillator has refused to cross, so we have stayed in the equity funds, waiting kind of for 2 signals, not just one, to make our move. On a midterm basis for IVV, we are seeing the price percentage oscillator did cross, so that's positive. Our derivative oscillator is moving forward again, very positive for a midterm basis. And then on a short-term scale, weekly scale, our charts are moving back towards the bottom here. Seeing again just a lot of indecision here with price, a lot of tails here, 1, 2, 3 tails here in the last couple days as investors kind of digest what is going on with this market. Like I mentioned, if we see this the price percentage oscillator cross, we could probably see us pulling short-term profits for just a little while. We only have 1 move left for the year, so that only gives us, if we make that move somewhere this week, that would mean we'd have to stay in those funds for at least 2 weeks. So we're kind of waiting on that to see where that goes. Moving on to VXF ETF or the S Fund. This is small caps. Again, very extended. Trend lines are doing very well here. Very, very positive. Things are all moving in the right direction. We just want to see if it might bounce off the 10 or the 20-day moving average as far as a pullback might be concerned, or just consolidations, we'd like to say. From a long-term basis for VXF or this fund, stayed in the positive with our oscillator. Like I said, there's a good chance we could see a bounce. As you can see, our price percentage oscillator is moving back up away from that moving average, and our derivative oscillator might react as well. And as you can see, price has reacted as well, moving up and moving forward from that 1 week here. We were really close on this week. We decided to get out and with our jump, and we got back in time to make a little bit off our jump. But those first 2 days, was it 2 weeks ago or a week ago? Just what was that? I want to say it was last week. Both on the 10th and 11th, just a ton of explosion in regards to, or it was towards the beginning of February, I'm sorry. The 3rd and 4th, a ton of explosion on price, and we've been in equity funds ever since, but we've only gained about 1%. So just goes to show, if you miss out on 1 or 2 really good days, you can miss the whole rally for that month. So we're going to continue to stay with equities a little bit moving forward and just see where things go. Finally, on a midterm basis for VXF, as you can see, like our other charts, that price percentage oscillator has moved above. Our derivative oscillator is moving more towards the positive, and price is reacting. And on a short-term basis for our charts, not seeing the similar picture as IVV or the S&P 500. Just saw our first down bar here after we saw a fake out. Like I said, 1 to 3 bars. This one lasted a little longer. It was 1, 2, 3, 4, 5, 6, 7. So 7 bars. That was quite a long fake out. Tends when fake outs break down, they tend to go in the negative. So we're watching this very closely. Like I mentioned, look for a move probably Monday or Tuesday this week for us to see if we might pull out of VXF. So that's VXF on a short term, small caps, ETF, VXF, or the S Fund. Moving on to international markets, so the EFA / the I Fund for TSP users. This place it's been all over the place this last month, just up and down, up and down. Our 20-day moving average is coming very close to our 50-day moving average. Not a lot of direction or price movement in regards to this. This fund is negative for the year too. We've stayed away from this fund for this entire year so far in 2020, and that has been just a blessing as it has not gone anywhere. Let's look at it at a technical analysis. From a technical analysis on a weekly scale, the EFA is in the negative, has been for a little while. Price percentage oscillator is below that moving average, and our derivative oscillator is in the negative. When we see both of these in the negative, we see price tend to react. And we had a really nasty week towards the end of January. It's tried to recover a little bit from there, but I would hold off on this fund until we get more of a direction for EFA. That's on a long-term basis. On a mid-term basis for EFA, starting to close that gap and get a lot closer here as our price percentage gets closer, but we have not had a cross yet. A lot of indecision in here, not worth investing in. And then on a short-term basis, we just had a cross with our short-term weekly basis, so this is not a fund you would want to be in this next week. As you can see, we've had just a lot of price movement up and down in regards to this fund, not a clear direction on trend as far as EFA goes. And finally, we're going to move into AGG. With AGG, we have been utilizing this for the year. It helped us get us ahead of markets in the middle of January, and we moved back into equity funds. It did have a little bit of not a correction, just more so consolidation in the month of February, and we're looking at seeing a double top here, possibly a triple top. If it can break that, that would be awesome. Moving forward on a technical analysis for AGG, here we can see on a long-term basis, chart is in the positive. We've been working on this for some time here. Really saw it kind of extended towards the end of January, and sure enough, with Bollinger Bands, the price needs to stay within the Bollinger Bands, and we did see that correction try to bring it back in. And again, we were out a little bit here, so that makes us nervous about investing in AGG. But on a long-term basis, this looks good. Moving forward on a mid-term basis, we're seeing the price or the derivative oscillator drop off a little bit, and the price percentage oscillator get closer. And as we see that, we see price starting to consolidate a little bit. So we're waiting on that. Our biggest indicator will be our short-term chart, which, as you can see here, we just had a fake out here, but our price percentage oscillator is not above that moving average. So don't trust it just yet. Like I said, we need 1 or 2 more days to kind of get a clear analysis of our trend. Once we see a crossover with one of these charts or a crossover with IVV or VXF, we could probably make a move. Until then, we're probably going to stay right parked where we're at. That is all of our funds for the TSP/Roth IRA and brokerage accounts. If you guys have questions, please write those in the comments below. The last thing we're going to analyze is just some markets, a couple market charts that we get from CCM Market Model. Go ahead and check out their YouTube channel. Very helpful and creative. One thing we'd like to look at is with these charts, and if I can blow it up just a tad bit. You see February 2020 here, we just had a cross with a MACD, and I put those up against, they put them up against some of these bullish periods versus some of these bearish periods. And as you can see, some of these bearish periods had some major crashes, 33%, 49%, 56, 19, and 14. And it just doesn't look anything like any of these cases what we're sitting in of February 2020. As you can see, MACD was crossing below that average line in all of these cases here, and we just crossed above it. So what does that look like? And that looks more towards like these periods here, 1995, 2003, 2009, 2013, and 2016, which, if you know your market history, all those were very bullish cases for long-term growth. The other charts I want to show to you real quick, I'll pull those up, is this here with, basically it shows with a long expansion of 12 to 14 months of good PE positive multiple expansion. What have we seen 1 month, 2 months, 3 months, 6 months, a year, 2 years, 3 years, 4 years, and 5 years out? And the thing we're really looking at, guys, is don't get caught up in this chart up here, but the average gain for all these. So 1 month, looking out from February moving forward, some charts move up almost an average of 2%, 1%, 1%, 8, 14, 14% within a year. So next February we could be looking at anywhere from, I would say, 10 to 14% gain in the market based off of prior history with some of these charts. And then you might ask, like, what are the biggest drawdowns? Some of the biggest drawdowns we saw within the same time period with 1 year was not even almost 2% for some of these, maybe 3% tops, guys. But overall, our pullbacks are not that significant, so it's very hard to catch a pullback. We usually like to try and gain about 2% off a pullback or consolidation. And as you can see, we barely got that this last month in February, and based off market history, we could see maybe possibly a 2% to 3% pullback moving 1 year out, but it would be interesting to try and catch it. So we're going to try to be a little bit better with our stocks. We're going to try to stay ahead of all market funds moving forward. Finally, here is some charts of what our moving averages look like in regards to bullish versus the bearish case. So as of February 13th, this was our moving averages. As you can see, our moving averages are down here, 50, 75, all these moving averages, slowest moving average on top, biggest one on the bottom. That's what you want to see, a very clean look, lots of space in between these. And what does this look similar to? It looks very similar to some of these cases, 1987, 1998, 2011, 2016, which were all very bullish cases, bullish periods. As you can see, there's that very clean look there. The look is a much tighter consolidation, but clean look here, tighter consolidation, clean look here, and a clean look here. Actually, this looks like one of our best cases for a bullish case moving forward. And of course, things can always change with the market, but as of right now, lots of space in here since October, and just looks really good. Again, we're going to have some consolidation, or it'll probably touch one of these moving averages eventually, but moving forward from a long-term basis, we're doing pretty well with markets. So we're going to keep our funds where they're at. The coronavirus virus, the virus that's come out, based off of this past week, we've had 1,370 deaths. How is that affecting markets? Guys, I don't want to downplay the virus because it can definitely affect stocks, but stocks are kind of ignoring this virus as it is. And if you guys look at this, the death toll versus the flu season in the United States every year, it's not that significant compared to the flu season. As you can see, 1,370 deaths doesn't come close to what the flu kills every year in the United States. So just keep that in mind going forward with when you hear all these news articles about the coronavirus. Lastly, one of the things that CCM brought up is their outlook on things is these items here, and we tend to agree on this top-notch channel. Long-term outlook remains very favorable. Okay, we're going to continue to monitor the technical analysis very closely. We're going to execute and mitigate based off evidence moving forward. And even if good things happen, guys, there's going to be some consolidation along the way, or they call it bad things. So we will just have flexibility on that. Look at things at a week-to-week basis and make no assumptions. Again, if you guys like this channel, go ahead, like, subscribe, or share. We really appreciate your thoughts. Write comments down below. Again, we're sitting at the number 6 spot on the TSP website, doing very well, beating all market funds. That brings us to our final thing of where we're allocated on our channel. So if you want to look, we are currently allocated in the C fund and S fund, or IVV and VXF ETFs. We have 50% of our capital in the C fund, 50% in the S fund, with new funds going to the F fund. Like I said, look to Monday through Wednesday for a move possibly into the F fund, just to conserve some of our capital gains for the month of February. That's another top-notch video. We'll see you guys next time.